Welcome back to Rich Dad StockCast. I'm your host, Denney, and today we're asking a question a lot of investors are thinking, but not always saying out loud. Is there an AI bubble? Now, AI stocks are soaring, headlines are nonstop, valuations are stretched. Some people are getting very rich, and others are wondering if this feels a lot like the dot-com era. So today we're separating the hype from reality. We're going to be talking about what a bubble actually is, what history teaches us, how smart investors think about AI without getting reckless. And joining me, as always, is Rich Dad expert Andy Tanner, who brings a disciplined investor-first lens to fast-moving trends like this. And before we dive in, go to stockcastbonus.com. Grab your free investing tools if you want clarity instead of hype. That's where it starts. Andy, welcome back.
Hey, good to be with you. I'm getting over a cold, so if I cough once in a while, I hope people forgive me. But great to be here, man, and great topic. Lots to speak about concerning AI for sure.
For sure. When we have the Elon's AI robot that replaces Andy, there's no more coughing. There's no more sickness,
Yeah,
I think, right?
Exactly.
But before we jump in, tell us stockcastbonus.com. Amazing resources. There's always things being updated
free
there.
stuff.
Tell me more.
Free stuff. Yeah, stockcastbonus.com is for the person that wants to do things, not just listen. You know, there's great opportunities to consume content, this podcast, many others. The idea is once you hear podcast, what am I going to do? You got to click the button to buy some stock or make the phone call to buy some real estate or whatever you want to do. And so buying assets is about action. So go to stockcastbonus.com. We have resources for people that want to do things in addition to listen. So that's stockcastbonus.com.
Very nice. All right. So going back to AI, let's start with the fundamentals. Thinking about bubbles, like what actually defines a market bubble? Is it just people saying it loud, or is there such a thing? Let's talk about that first.
A market bubble is when things are valued more than perhaps they should be, than perhaps it's justified. I mean, from a technical standpoint, what's your house worth? Well, the only way you know is to put it up for sale, and what someone buys it for is the price. But there can be frenzy. There can be, has the value of Bitcoin doubled and then halved again? Does it go to 120 grand and back to 60? It's just people's opinions. But probably more important than what a bubble is how they burst. And how bubbles burst is when there's a cash crunch, when people are forced to sell things against their will, in squeezes and short squeezes. And when people get underwater and they get in a cash crunch, then they're forced to liquidate, and that forces prices down really quickly. And that's how they burst. So I think that there's some areas of bubble in AI. It's hard to pinpoint where they are. In the dot-com era might be a fair comparison in some ways. But in the dot-com, you're going to have some winners and some losers. Google wins, Ask Jeeves loses, or Alta Vista loses, or what have you. And, the America Online, America's still online, but not with America Online anymore, right? Netscape came and went. So there's going to be winners and losers in AI too. But I'll tell you the trade I like for AI is a couple of them. Number one, I love the Levi Strauss type of trade. And what I mean by that is when you have a gold rush, like in the 1849 gold rush, there's a lot of things that are purchased tangent to that gold rush. So, maybe in the gold rush, a lot of people think, well, I'm going to make my fortune. I'm going to go to California and I'm going to, pan for gold or mine for gold. And it's all about the gold. And people are like, yeah, it's all about the AI. But if you look at what's to the side of panning for gold, Levi Strauss sold the blue jeans to go do the work. And you want to sell the picks and the shovels. So AI, there's so much at stake. It's a lot like Sputnik. It's a space race of a different sort. People know that whoever gets the upper hand in that is doing well. So what does that mean? I have a friend who I was speaking to the other day, works with a very large construction company, and they're making tons of money building data centers. He said, that there's one data center they're working on. I think just the wiring alone was like a multi hundreds of millions of dollar order, hundreds of millions of dollars just in the wire for data centers. So, if you're selling backup generators, because those need backup, right? You got to have a backup generator for emergency. If you're selling construction, if you're selling wiring, if you're selling the things they need to build a data center, I don't see a bubble there. I see a boom there, right? All of the Levi Strauss type of trade is tough to miss. Now, there's going to be some people that invest heavily in data center, and Anthropic's already had lawsuits from authors because what's a book worth now if the AI can read it? And so there'll be some winners and some losers. There'll be some people that miss earnings, but I think the overall, I think it's worth stomaching any bubble that pops, and here's why. Labor's about to be free. Maybe we can talk about that more in the second half of the program. But any business where labor is free, boy, doesn't that change productivity? When basically it's electricity and maintenance now to run a business, electricity and maintenance. And if you can afford the electricity and the maintenance, automation, everything else is free. And what that does to a gross domestic product and what that should do to the bottom lines of the businesses that use AI, not develop AI, is a big deal. So I'm probably less confident. I think, the NVIDIA and the Google and the IBM and the Microsoft and those guys are going to be studs. They've got a lot of money, a lot of power. They can really crank this stuff out. They can afford to lose a lot of money building data centers, like I imagine. But I think it's really the users of the AI that are really going to be equally benefited to win. So AI bubble, there'll be a few losers, but overall, I'm pretty bullish on it, which is weird for me to say, but I really am.
I like the bullish thought process, but I do want to go back a little bit. We've talked about the .com era, and history repeats itself somewhat. I think we're in new territory with AI. But my question for you, because I know you're such a student of history and the stock market, how does this compare to the .com industry? What's the same? What's different?
The thing that was the same for me is like the Web3, that type of stuff. Things like certain cryptos, certain NFTs, that type of stuff feels very .com-y to me because back in the .com, no one was talking about the money they were making. They were talking about the money they were raising. I had companies come to me in the 90s saying, hey, we're going to do all this stuff and look at all this money we've raised. Look how their excitement was on the money they've raised to go do whatever. It wasn't on the money they actually made. So when you're talking about raising money and you're proud of the money you've raised and the idea and the people that's just a good salesman doing a good job selling an idea. Then they talk about their team of these quote unquote, if I heard the word serial entrepreneur one more time, I wanted to kill myself, these people talk about what they were doing in their past rather than what they were doing in the future. So money that was raised rather than money that was being earned, and what they'd done at the other 20 companies instead of what they were doing at this one. That's kind of like old Kenny McElroy says, the bigger the brochure, the worse the deal. So a lot of the Web3 stuff, a lot of the NFT stuff, conferences I'd go to, it was buzz and it was hubbub about it, but very little tangible, asset building value. With AI, it's a little different. Google is talking about the money they make. Anthropic, OpenAI, they're talking about the money they're making. I mean, what product like Chat GPT, I've never seen a product with global adoption better, faster, bigger than that one in my lifetime. So they're not talking about only what they're going to do. They're talking about what they're doing. And that's a big, big difference. So there'll be some people who invest heavily and lose. And that's okay because either way, they're going to buy their data centers. Either way, they're going to pay for all that energy. I'll give you a trade, for example, that's done well for me is Cameco. Because, they're going to need the bottleneck in AI more than anything else. It's not a bubble, it's a bottleneck is energy. The amount of electricity that is needed to really put all this hardware and software to full work, it's, the power in the grid can't do it. And so to really have AI go to the next level, they can build the machines and they have the software to do it. It's just they don't have the power. It's Clark Griswold here lighting up his house at Christmas time. And so they're going to open up 3 Mile Island. Did you hear that? They're open. Microsoft's got interest in that. Open up 3 Mile Island again, getting that going. All of the big players are looking at building nuclear power plants. If you're George Bush, it gets nuclear, however he said it. But nuclear power is a big deal. So one of the trades I made that is done very nicely is Cameco, because I'm like, well, I don't know who's going to win, but I'll sell them the uranium. So that's kind of the attitude I've taken is, what are the raw materials? It's a lot like crypto for me. Yeah, I bought some crypto just to learn about it. But what I really like is they have to buy my electricity from the utilities I own. They have to buy the iPhone to look up what their crypto is. They have to buy the Verizon and the AT&T network that I own to transfer the stuff. They have to, go to Coinbase, which you can write covered calls on. And so all of those products related to it, I'm the biggest fan that stuff ever had. What do I care if it goes up or down? They're buying my stuff to watch it go up and down. So that's kind of how I feel about AI. Is the building of it is going to happen whether a company's successful or not. They're spending the money. So I like that trade. And then in summary, I also like the companies that are going to use the technology as much as the companies are going to build it. Because whoever wins, you'll use it. So I'm very bullish on industry in general because they're going to use it. And whoever wins the AI battle, great. If it's Anthropic, great. If it's OpenAI, great. If it's both, it's great because we're going to use it. Mm-hmm. And it's the use of it that's going to save so much money as much as trying to bet on who's going to be the winner developing. Not that you shouldn't bet on, Elon Musk, and that you shouldn't bet on Anthropic, and you shouldn't bet on Google and Gemini, and those are all insanely powerful products.
Now, you mentioned being very bullish on this, and I as well. I'm very optimistic, but I think going into any investment, there should be a slight lens of pessimism too. What could go wrong with the rise of AI and this bubble? Is there anything that could burst the bubble? Is it constraints of energy, data centers, local governments saying, no, we don't want that here? Is there anything that would make you bearish at all?
Yeah, I mean, there's a lot of unknown with, it's kind of like if the king kills all his subjects, who's left to pay homage to the king? If the god wipes out everybody in a flood, he's got 6 people to worship him now, right? And so these guys, this consolidation money, it's got to be rough because, if you control everything, is it going to be UBI? I don't think so. I mean, maybe. But there's such disruption that could cause problems, massive disruption. There's going to be unemployment for sure. So what does that look like? You got to have people working to have money to buy the stuff, right? So all these things ebb and flow together. And usually, Smith's invisible hand takes care of it. Maybe not this time. I don't know. So there's that. I don't think it's creative disruption. Creative disruption is when you have a human that does more and has a higher job. In other words, if I'm going to replace someone who digs a ditch with a shovel with a track hoe, well, you need someone to maintain and ship and paint and drive the track hoe. And you just get more work done with the track hoe. So production goes up, but you still need that human. The challenge where AI breaks down is now you don't need the human. And so name a job that we can't build a machine to do now. They don't exist. There's not a job in planet Earth that you could not build it to replace, whether it's a surgeon or a lawyer or whatever. And they probably do it better than the human does with more precision. The question then becomes is comparative advantage. And it's a new way to use that term now, because the comparative advantage would be what's the cost of replacing the human, not whether we can do it or not. We can do it. The idea is, what does it cost to replace that human? So McDonald's looks at a kiosk, looks at an order taker, says it's worth it. Let's build a kiosk. So done. Less order takers, right? So comparative advantage will be a big thing, and how that spells out. I'm more bearish on people who have jobs and bullish on the companies that won't need them anymore. So if there's a bubble to be had, it's probably on the personal level of, if you're a coder, for example. I get resumes all the time. I'm getting people all the time who are getting laid off, where 5 years ago, a coder was the most secure thing you could imagine. Everyone needs coders. Now I'm doing coding and I don't even know how to do it. I'm just telling the AI, if I want to do something, I say, hey, Claude, build me an app for this. Can you build me an app for this? And so it's yes. And he just builds the app for me, personal app, don't need to buy it. It's just done in an hour. So the coders are in trouble, and everyone else will eventually be in trouble.
Gotcha. That makes total sense. Well, let's do this. Let's take a quick break. I want to get more on the bullish side of things and talk about labor and what's ahead. Now,
Yeah.
as we think about AI, it's clearly transformative, but transformation doesn't automatically mean every investment is a good one. So when we come back, Andy's going to break down how smart investors approach AI during periods of hype, how to participate without becoming a casualty of expectations. And don't forget, go to stockcastbonus.com. Grab your free resources there. This is how to stay disciplined when everyone else is chasing. Stick around. We'll be right back.
So far, it's been great. I needed a source where I could really enrich my education through stocks. I didn't really have an avenue for it, and it's helped me a lot. The simplicity has really gotten me on the track to where I enjoy the learning, as well as it's really solidifying in my mind. And they're not just trying to sell you something, they really care about the people that are in the course, and they really do care about you and your personal goals, and what you want to do is to help you and your family and whatever your goals are in life through that. So it's really been great.
Welcome back to Rich Dad StockCast. Now, Andy, let's talk strategy here. You said you're bullish going into the future here with AI, maybe a little bearish on the job market, a little more bullish on the companies. Can you expound on that a little bit more for us?
Well, it's unfortunate. I think there's going to be a few winners and a ton of losers. And we've seen this wealth gap, the middle class kind of dissolving for quite some time. Rich getting richer, poor getting poorer, and a huge divide. That concentration of wealth is going to continue like a black hole, man. It's just going to suck it into a very dense area for the haves versus the have-nots. The one percenters are going to get really, really, really rich, and unfortunately, a lot of people I think are going to struggle. This is why I think so. It used to be that you would buy stocks. I think the idea of cash flow is going to be more important than stock price anymore. We're going to get back to that. For example, I did a webinar, and it's one that I give over and over again. Every once in a while I've been given a special session where we go into this AI stuff for like deep with statistics and numbers. We listen to the people who are building it. We have interviews from those guys. But what I think is really interesting to keep your eye on is buybacks. So I'll give you an example. Layoffs and buybacks. Companies, they're not dumb. They know. And a good example would be Salesforce. So the Salesforce CEO comes out a while back, and he says, we're going to cut 4,000 jobs, coders, customer service, whatever. And they say, okay, why are you cutting 4,000 jobs? That's a lot of families. 4,000 people, that's a lot of people. And he says, is it because your bottom line is suffering? Yeah, make some layoffs, right? Are you struggling? You need to save money and make some layoffs. Adjust your size. He goes, no, I just need less heads. AI is taking these jobs. Just very matter of fact about, I need less heads was the exact phrase he gives. Quote, I need less heads, unquote. So on the one side of the business, they're not losing money there. They're gaining a bottom line by losing employees. They're eliminating expense, which will make me more profitable. Now, on the other side of this is probably even more interesting. In the same week, Salesforce says, well, we exceeded expectations the quarter. We're making more money than we thought we would. And they got approval from the SEC to do more buyback, which means that when you take your company public, you can cut it up like a pizza. Maybe keep 4 or 5 slices for yourself and then let people buy the other slices, called shares. And that's called the float. It's a very important term to know right now, is the float. So, for example, Salesforce, maybe 80% of that, they've got about 4% of the shares that are restricted. So whoever took them public kept 4% of those shares for themselves, sold the rest of the company to the public. 80% of that's owned by institutions, 20%, other places. So they're going to buy at that current price. They're going to buy $50 billion of shares back. Think about that for a minute. Now, if you're the CEO and you got $50 billion burning a hole in your pocket, what could you do with that money? What's the highest and best use you could do with that money? Well, you could do a dividend and give it to shareholders. That's not going to happen. You could buy a different company and make an acquisition. Nope. You could do research and development and invest and try to make your own technology, but nope, we're fine there. So the one thing they say is, I want my pizza back, because it's worth more for me to have more of that company, right? Have more of it for my own, to collect more of that cash flow. We don't have to share it anymore. So rather than having a trend of going public, you're going to have an opposite trend of going private, where more of those shares are held. Well, what that does is it makes the shares available for purchase scarce, and that takes stock prices higher. And I think you're going to see more of that. I think if you were to look at the trend of buybacks and the trend of technology layoffs, that you'd see an increase in layoffs and increase of buybacks. So that instructs me to say, what is he thinking? He's thinking less heads on the labor side to save money, and he's thinking more cash flow, buy more of my own company on the other side. This is speculation. People can put in the comments and say Andy's, an idiot or whatever. I've been called worse. But I think you're going to have a tipping point in the next 2 years. This is my prediction. So we'll rewind this in 2 years and see if I'm right or wrong. Over the next 2 years, I think you'll see a tipping point with labor, where people are going to start seeing more writing on the wall. As this technology unfolds and more people start getting replaced, some are going to say, oh, there's creative destruction. There'll be other jobs. What job does that truck driver get? What job does that Uber driver get when they're automated? What job? I've been in an autonomous vehicle. They're great. They're fantastic. Nothing wrong with it. So, what job do those guys get that another AI can't do better than they can? Once people realize there's no future in labor, that the value of human labor is drastically dropping, which is really tough to say, I'm not worth anything anymore. Moving a box, roofing a house, doing electrical, all that stuff's automated now. So if the value of human labor goes down, people begin to abandon human labor. Like, picture it this way, Del. Let's say the Zimbabwe dollar starts losing value, and then people abandon it and they look for something else. And I think that the idea of ownership, where people realize, what can I do that AI can't? Well, I can own things. And, for example, there's no AI you can program to own Apple. My shares of Apple are mine, and they're not for sale, by the way. Other people are selling. You can go on the market and still buy Apple, but I'm not. My shares are not for sale. I haven't put mine up for sale. I'm keeping all my shares of all my stocks, because that's the one thing that I have that AI can't have. And when people realize that there's no rat race to run anymore, why did people run the rat race? Because it's easier than investing. It's really easy to show up, do what you're told, and get a paycheck. That feels very sure, very predictable, right? Show up, get a paycheck. Oh, buy some stock. What if the price goes up and down? I better not do that. So right now, the fear of investing, for most people, the fear of investing is greater than the fear of having a job. I think that might just flip in the next couple of years, where the fear of relying on a job is a lot more scary, a lot more risky, a lot more uncertain than owning the companies that are replacing you, than owning the AI. And if that happens between the buybacks and the clamoring to own rather than labor, I think you might see the biggest stock market boom in the history of stocks. I think it might be bigger than anything we've ever seen ever. Free labor and everybody wanting to own because no one has confidence in work. It's an interesting theory. I don't know if I'm right, but it's the one I'm betting on.
As we've had these conversations and me just pondering, I feel more and more inclined that this is the future. Now, I do think it's important to maybe paint a little bit of vision. And I'm curious, Elon Musk just recently made a shift in the news. Hey, we're not selling Models S. We're not selling Models X anymore. We're changing that to robots. We're building robots now. We're going to have I think he said 10 billion robots by 2036. What does that do for our future?
Think about this. You know, what it does is it replaces your phone and all apps. Like all apps go away with AI. All these little apps we used to, I got like 50 apps on my phone. It's just going to be one. You'll have your robot that follows you around, and maybe you have 2 or 3. And if he prices them at what he thinks he can, 20 grand, I mean, that's nothing. 20 grand for robots, nothing. So, go mow my grass, get the mail, do whatever. Anything on that app, I'm just going to ask it to do, right? It'll understand me. And it's kind of like that Will Smith movie, I, Robot, man. It's the science fiction often, it often eventually happens. So the people that own that technology, they rule the world, and the people at Anthropic and the people, they know it's dangerous. They know it's unpredictable. They're trying to warn, yet they can't stop it from happening, because it's kind of like, it's almost like the people that justify stealing. I was watching a movie and with Denzel Washington in it, and they had this mafia who was in Italy, pillaging their own people. And they're like, these are your people. He goes, yeah, but if I wasn't pillaging them, someone outside would. So I just as well be the guy committing these crimes, because if I didn't commit them, other people would, right? That was their rationale. Well, that's kind of how they're doing. It's like, look, if I don't develop this AI, China will, and better us than them. And so they won't stop. The legislation can't catch up. It's just going to be an interesting world. And the thing I know, the one thing I believe anyway, don't know if I know it, but the thing I believe is ownership is always better than not owning. Owning houses is better than not owning houses. Owning companies is better than not owning companies most of the time. Usually a person who is wealthy because of what they've purchased along the way. And I just think that over the next 2 years, ownership, the blessing of ownership, some people might be excited about UBI. That would be very disappointing to me, because I like to be the best I can be. And if the government, it's kind of like look at Social Security.
Let me pause it. UBI, just for the average listener, universal basic income, just to define it. Yeah.
Which we kind of have a version of that for the older folks in Social Security already, right? Well, what that means is the government decides what that number is, and they decide how small you're going to be. And that lack of freedom and that lack of that locus of control being external is terrifying to a person like me who has an internal locus of control. Like I don't know. I'm never going to be like an Elon Musk. I'm not that smart, but I would like to be the best that Andy can be. And I'd like to accumulate the wealth for my family that Andy can accumulate. So I don't like the idea of someone saying, nope, it's just got to be fair and fair alike. And the only way to be the fair is the same. It would be so lame to go to a basketball game where all the players, there were no superstars. There's no Luka, there's no LeBron, there's no Michael. we go to see greatness. Go to the Olympics where everyone runs the same speed. We like to see greatness, and I like to admire greatness, and I like to be as great as I can be. So it's a world that I or nobody else can predict. I mean, the defining characteristic of the markets is unpredictability. We don't know bubble or boom. It's just my opinion. But there are generalized principles that seem to survive in all cases. And ownership and cash flow are principles of wealth that I think do survive, that do survive if you want to own this technology. If you want to get ahead and be the best you can be, learn to own things.
I love that.
So that's why you go to StockCastBonus.com, and check out, get on our mailing list. And when I do a AI webinar and go through some of these numbers more in depth and how we acquire and how we evaluate a stock and how we look at whether we want to own it or not, all those things we can do, we can get into detail on.
Fantastic. I love it. Well, I think that concludes our episode. What a great episode. I love this right here. This was fantastic.
It's an interesting world, that's for sure. It's going to be fun to watch.
Indeed it is, and participate in it and own more stock. Bubbles don't form because technology is fake. They form because expectations outrun discipline. And a big thank you to Andy Tanner for bringing clarity to one of the most important investing questions of our time. If you want to stay ahead of the trends without becoming a headline casualty, go to StockCastBonus.com right now. You'll find free tools, education designed to help you to invest with logic, structure, and confidence. If you like this episode, make sure you like it, subscribe, share it with someone who's wondering whether AI is an opportunity or a danger. You are not here by accident. You're building something that most people won't. So stay smart, stay invested, and we'll see you next time.
Thanks, Del.
This podcast is a presentation of Rich Dad Media Network.